Welcome to the Stock Market Daily News podcast for Thursday, February 13th, 2026. Yesterday's session saw mixed action across the major indexes. The S&P 500 edged up by 0.25%. The Dow Jones climbed nearly 0.5%, while the Nasdaq slipped just under 0.1% as investors weighed earnings and ongoing concerns about AI-driven disruption. Our lead story: the halo effect is taking hold as Wall Street shifts cash away from disruptible tech stocks towards heavy asset giants. Stick with us for the market's hottest stories, surprising sector rotations, and what it all means for your portfolio. Let's dive in. First up, let's talk about the halo heavy asset, low obsolescence trend. Fears over rapid AI advances are rattling software and brokerage stocks, while established companies with hard assets are gaining. We saw enterprise software ETFs drop over 20% year-to-date, while the energy giant fund XLE is up 23%. Leaders like Exxon, McDonald's, and Walmart are suddenly in vogue, all viewed as much less vulnerable to technological obsolescence. For investors, it's a fundamental shift. Tangible assets are back in style, and the market is revaluing safety over speculation. Keep an eye on sector rotations as AI disruption themes drive risk-off moves in tech. In company news, McDonald's beat expectations in its fourth quarter. The fast food giant reported global comparable sales growth of nearly 6% and a full-year revenue climb to almost $140 billion. Marketing campaigns like the Grinch meal delivered record results, and digital loyalty users hit 210 million. Looking ahead, McDonald's plans up to 2,600 new store openings in 2026 and aims to expand margins. The stock held steady near record highs, proof that scale and reliable demand can still outperform hype-driven names. On the tech front, HubSpot posted robust Q4 and full-year results. Revenues jumped 18% to just over $3.1 billion, and net revenue retention improved. HubSpot's pivot toward embedded AI and usage-based credits is succeeding, as its customer base nears 290,000. Management also greenlit a $1 billion share buyback, suggesting continued long-term confidence. The stock rose sharply in after-hours trading, reinforcing optimism for SaaS firms that prove genuine value through innovation and scale. Shifting gears to global investing, ARK Invest ramped up its bets on the crypto ecosystem for the 9th straight day. The fund added $11.6 million in bullish, ticker BLSH, despite a 15% year-to-date drop. ARK also snapped up Robinhood and Circle shares, targeting crypto-adjacent firms battered by recent volatility. What's the play? Institutional buyers are seizing lower entry points ahead of expected rebounds, viewing this as a long-term accumulation opportunity in digital assets, though risk remains elevated if crypto prices keep sliding. Wrapping up with macro trends, India's stock market is seeing fresh foreign inflows after a US-India trade deal. However, anxiety around AI's impact on white-collar jobs is tempering optimism, particularly in IT services and real estate-linked sectors. Investors are grappling with two powerful forces: global trade tailwinds helping exporters, and structural tech disruption pressuring earnings and employment. Expect continued market bifurcation between export manufacturers and knowledge economy stocks. Quick recap: the S&P 500 closed modestly higher, Dow outperformed, Nasdaq was slightly down. Theme of the day: AI disruption is fueling a flight to safety, with real-world asset plays outperforming tech. Watch for upcoming retail sales data and more big-name earnings tomorrow. Don't forget to subscribe and follow for your no-nonsense daily market brief. Thanks for listening.